my name is Jeff Nicholson and welcome to my YouTube channel. In this video, I want to talk about the doubts of an August rate cut by the Bank of England. We've done some videos this week. Mortgage rates have been going down. I'll cover why that's happened, why and who is saying that the interest rate at the Bank of England might not drop in August. And also I've got some American data that's just come out today, which is very interesting and a lot better than people were expecting. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We're on the way to 26,000 subscribers. I appreciate everybody that does it. And for you, by subscribing, you'll get the latest news, property strategies, and all sorts of great stuff. And while you're here, smash like, tickle like, do something to that like button over there. That really helps me with the YouTube algorithm and helps us grow the channel. So thanks to everyone that does that. So, what is going on? Well, one of the Bank of England monetary policy members, a guy called Jonathan Haskell, he's been doing some speeches recently, which they can now do because the election is over. They're not really meant to talk about stuff while the election was going on. So he's been doing some talks and he's saying that he feels that interest rates should not go down for now. One of the two reasons that he cites for that is, one is inflation could come back, which the Bank of England has said that they do expect that inflation could start creeping up again in October. So that is mostly going to be dependent on energy. And the other one is that jobs are pretty good still. Now, they have started ticking downward. So around 4% unemployment at the moment. But it isn't terrible. And so because it isn't terrible and it hasn't had sharp declines, they feel that the economy is more robust and can cope with these higher interest rates. So you've got house prices that have been pretty stable, job market's pretty stable, people are also getting pay rises above inflation at the moment, and so they just feel that we can survive on the interest rates as they are. So not sure, I feel that some of this inflation that we're expecting to potentially come back isn't down to us. So it's not going to be something that we can control. It's going to be energy costs. And so if the energy goes back up, that's like service side, we can't spend less. Well, maybe we'll turn some lights out in our house or something like that. But we're not going to spend less. It's not because we're being reckless as consumers. And so they are driving inflation up by keeping the rates as they are. That meant rents have gone up at record rates, 10% for rental increases. Your rent going up 10% is significantly worse than a bag of tomatoes going up by 10% for sure. So that's one thing that one of the monetary policy members is out there, and sometimes they deliberately leak stuff like this or talk about stuff like that to get the markets prepared for what they're actually intending to do. They want the stock markets and everybody else, the bonds and all that sort of stuff, to be prepared and not to be any shocks. So that's one thing. Next, kind of contradicts that, we've had some really good data from America today. So inflation data is better than the market expects over in America now. So in the USA, they had inflation at 3.3% on an annual basis. Now, the consensus was this was going to drop today to 3.1%, but it didn't. It dropped to 3%. That tiny little 0.1 makes a big difference. The markets are now pricing in 2 interest rate cuts in America this year, and they're saying the September cut now is gone up to 96% probability. So that's interesting to see that has changed that quickly. We were talking about, a lot of people a few weeks ago were saying, look, if this comes in high, 3.2, or it doesn't go down at all, or it sticks where it was at 3.3, then we might only get 1 interest rate cut. Now, also, you've got in America, the Fed doesn't want to be seen political because they've got their election coming up in November. And incidentally, their next, one of their meetings is just after the election. And that's when a lot of people felt that they were cut. So the election in America is on November the 5th. And on November 6th, probably the Federal Reserve has planned that out on purpose when they've worked out the dates for the year. They're going on November the 6th. So they could cut rates, whether that's Trump getting into power or Biden staying into power, and not be seen that they're impacting the election in any way. However, what's also interesting is Trump's rhetoric. Trump is very, very anti the Federal Reserve in America, and he's likely that when he gets in power, he'll do all he can to get rid of the chairman of the Federal Reserve in America. And by doing that, he can install somebody that would probably cut rates. So if Donald Trump does get into power, which he's winning in all the polls at the moment, then there's likelihood that interest rates in America would drop quite quickly after the election. Now, if that happens, then the UK normally follows the Fed. So we will normally wait until the Federal Reserve cut, and then we will cut our interest rates as well. And so if they cut in September, that would be good for us, because if we have a meeting in September, we could also cut fairly soon after that. Now, what's also been good, because the American inflation has done quite well today, the pound has got stronger and the dollar has got weaker. That gives us some wiggle room if we don't want to follow the Fed. And so the Bank of England have said if they feel interest rates need to go down in the UK earlier than America, they won't wait for the Federal Reserve. And why you would do that is because when you cut before the Federal Reserve, the pound will get weaker, and that means everything that we import would get more expensive. But if the pound over the next few weeks and months gets stronger anyway, that gives us that little bit of buffer, that little bit of protection. And the fact the pound's got stronger today is good news, and hopefully will help with our inflation data as we go through for the rest of the year. So interesting to see the markets in the UK now don't feel, because of these discussions and talks, that we will drop interest rates in the UK in August. But now the Americans are pricing in a September cut. Maybe we could have one quite soon after that. Now, this is kind of irrelevant to your own mortgage rate at the moment, because the market is quiet at the moment. There's less transactions happening at the moment, 25% less mortgage transactions happening, and 15% less total transactions happening in the market at the moment. So what we are seeing right now is a mortgage price war. So regardless of what the Federal Reserve do or the Bank of England do, banks need to get business. And so if the market's quiet, they are cutting their rates at the moment. So if you want to know who's cutting rates, go and check out some of my recent videos this week and see who's cutting rates. There's a lot of big lenders cutting rates at the moment, and you could get a great deal. So August isn't looking as promising as it was. Let me know what you think in the comments below. Do smash like, do subscribe, check out all the other content on my channel, including this video right here.